SCHD might not be the best investment for your dividend portfolio. Now, hear me out. I think SCHD is a phenomenal position that a lot of people are talking about. That a lot of people are continuing to kind of have these discussions on whether you should hold this in your portfolio, whether it's a something that can pay you a decent dividend. And while that is not wrong, it can pay you a really decent dividend. It's just the last year has not really performed well. And maybe it's not a good fit for your portfolio, but also it might be at the same time. Because while this year is not really the best year for SCHD, it doesn't mean that next year won't be, right? And it's different than everything else that we've invested into, or that you want to invest into, or that you're told to really invest into. So in this video, I'm going to go through my over 1,000 shares, almost 2,000 shares that I hold in SCHD, what I've been able to gain over the last year here, and also my last dividend paycheck and how much I've been paid. So before we get into this, make sure you guys hit the like button, hit that subscribe button. If you guys want to sign up for the platform that I'm using, which is Robinhood, I'll have a link down below. I also have a link for Webull and any other platform that you guys can use for trading. Now, within this video, again, we're going to go through the growth or fall in how much we've been able to invest in SCHD. We're going to also compare it to another play that I think is more traditional in a sense when it comes to the sectors that you're investing into, and also understand how much we've been paid in dividends. So first, I think we need to start out with SCHD by itself. And where SCHD currently stands is $27.12. We're looking at a year performance of being down about 3.5%. The last 365 days, that's where things stand. In year to date, it's down by 1.29%. If we scroll down here and look at what SCHD is traditionally invested into and what sectors are invested into, you have 20% energy, 18% consumer defense, 15% healthcare, 10% industrials, 10% technology, 10% consumer cyclical. So again, I think it's kind of different than what you normally see. And I think with that being said, let's go into the account really quick to see how much we've been paid in dividends for not overall, but just SCHD. We'll go through our overall dividends in the beginning of next month. Right now, it's the end of this month, which we still have, this day to really go off of. But if we go into my account details, I want to show you guys what I received from Charles Schwab U.S. Dividend Equity ETF. Again, I have, $48,276.87 or 1,779 shares in my possession. With that 1,779 shares that I currently own, I was able to receive $458.99, which has been reinvested. This is at a 26-cent per share level. With it says 1,762, so I guess everything else that was reinvested, it was put back into SCHD. And that's the way that it'll be as we move along. It'll just continue to climb in the amount that we have based on being invested into it. Now, the reason why I said in the beginning of this video that it could be that SCHD is not necessarily the best play for your portfolio is just based on performance from this last year. However, overall performance doesn't look bad at all. SCHD, if we scroll down and look at the performance here, we're going to see that in the last year, it says that we've seen a performance of 2.84%. 3 years, about 9%. 5 years is 10 or 12%. 10 years is 12%. And since 2011, 12.57%. So it still has that overall performance that looks decent. It's just the last year hasn't necessarily been the best for SCHD, even after seeing the split that they had and all that stuff, right? So if we go up here and we look at my performance, again, in the last year, I'm down by 3.5%. And if we look at my overall return, I'm only up by $23 on this position. This is 0.05% of my portfolio is $23 that's there. $48,271 you would expect to be able to make something decent out of it. Now, again, it's had that movement. If we look at 5 years, it's up by 47, 48%. If we go by the max, it's up by 225%. So it's mainly just this year that's not really performing really, really well. And we expected it to kind of make these moves, especially with all the conversations and everything that's happening there. But the reason why is because they're not heavily invested in the technology. And technology, just for years, has been a thing that keeps ETFs at the top, that keeps the S&P 500 there, that keeps things like FDVV. This is why what was brought to my attention was SCHD, which is a growth dividend ETF, which I believe is like 40% is invested into technology, which is amazing. And that's the reason why you can see 20% in 1 year, 20% average as you move along. But for a dividend portfolio, you're not being paid a massive dividend, which they offer. It's like 0.3% for something that pays quarterly. It's not necessarily the best dividend at all. It's mainly just for that growth. So if you have a Roth IRA or something, or a traditional IRA, putting it in something that is a growth, or maybe having a little bit more risk and then putting things into something that's more consistent, you're able to see that growth over time. So why or what should you really look at if you're trying to find a play that's going to give you the best of both worlds, give you a good dividend, give you great growth, all of that? I honestly think FDVV is a fantastic play that has given me a lot over this past year. It's up by 10% over the past year. For me, it's up by 15% in my total return. $1,551 is what I gained in that time period of holding it. And know that SCHD, I've only gained $23 out of that. Now, also, we have to factor in the dividend. So I'm going to go over to my dividend tracker and bring that up for you guys. My dividend tracker shows that FDVV over the last year, I've been able to gain $211. For Charles Schwab, I gained $1,241. So a total of, let's round up, $1,300 for Charles Schwab, SCHD, and for Fidelity, I've been able to gain $1,700 in the growth and the dividend that's there. Now, the reason why FDVV has such a high gain, as well as also seeing the dividend percentage that it has, which is 2.79%. The reason being is because of the fact that what they're invested into is 26% technology, 15% into financial services. Over the last year, 10%. Over the last 5 years, 100%. And max, you're looking at 122% since the lifetime of this. So you're seeing the growth within this over that shorter period of time of 100+%. But then, SCHD for the last year just hasn't performed well at all. It doesn't mean that it won't perform well like throughout history. It just means that last year was not the best to hold SCHD over something like an FDVV, because the growth absolutely blew away what I had in dividend gains for SCHD. Now, while I didn't really lose anything in SCHD, I'm gaining a lot in the end with the dividend and the price remaining a little bit flat. Again, it's just this year hasn't been great for my SCHD position. Now, am I getting rid of this SCHD position? No. I think that this is kind of this year is a little bit of an outlier. We might see a lot more as we move along, but also this keeps my money in another sector, not just the technology sector. I can invest in the technology sector knowing that I have 50,000 or so in energy, right? 20,000 and 20% in energy, 15% in healthcare, 18% in consumer defense. I know that I have different sectors that are covered, that if those sectors absolutely explode, I'm a part of those as well, while also receiving that quarterly dividend, which at the moment is sitting at 3.82% dividend yield for the quarter. So anyways, let me know what you think about SCHD and what you think about my dividend paychecks, because how much I received in dividends, I received $458.99. And just to give you a comparison, I received 37 cents per share for FDVV, and I have 207 shares, which I am consistently investing more into FDVV. And I stopped my everyday investment into SCHD, and I'm just going to allow it to reinvest into that position as we get paid the dividends overall. So let me know what you think about this. If this influenced you at all, or if you're going to buy any other position. But I think it's great to have multiple sectors covered. And the only sector that I haven't been heavily invested into, honestly, is technology. And I should be. So that's the move that I'm making for the end of 2025 into 2026, is to heavily invest into technology. But anyways, hit that like button, and I'll catch you guys in the next one. See ya.